um, or AMC, right? So, but I know for the serious indices and the forex and like the bigger stocks that make the market move, it's all controlled and dictated, right? And I can tell this by different patterns, right? Um, so one gap followed by a break of structure, right? Of market structure, right? So right here, I'm going to display the gaps just so you guys get it because not a lot of people understand what a proper gap is, right? See the lines how they popped up and they automatically identified it. So this would be a fair value gap. 3 candles, 1, 2, 3. And then the gap between this candle and this candle, you have sellers but no buyers, right? In this area, right? So I see that, and I see that we just took out a high right here, and that we dropped. So whenever you see large like this, not like this, but like this, or like this, or like this, or like this. It sucks not having my mouse. I left my mouse at work. Not like this. When you see big movements like that, that's manipulation that's manipulation, right? Or retracement reversal, right? So with that being said, the central banks are moving the market so fast that like they're leaving orders behind because they're just stealing all the stop losses and all the orders that are up there and they're screwing everybody up, right? All right. So when I see a big drop like this and a gap right there, like I'll automatically know supply zone because supply's up top, demand's on the bottom, right? And it's not for that company, it's for the actual orders, right? So what I'm going to do is I'm going to start at that gap and I'm always on the higher time frames when I do this, right? I'm going to draw up to the high. I'm just going to leave it alone. I'm going to do the same thing at the bottom where the demand is, or the demand, which would be right here. Obviously, this part of the market's closed right now. So if I start at the wick, and I go all the way to the low, right? So some people will say use the body because there's more liquidity, but the retail traders have their stop losses within the wicks and below the wicks, right? All right. So now what I'm going to do, I'm going to refine this box and this box because my stop loss right here, that would be from 43 all the way to 70. That's too freaking huge. And I'm not, the risk versus reward is not there. So I'm going to go to the 3-hour. I see a gap is still the same candlestick, right? This red candlestick with a wick, the gap, and then to that point, right? So I'm going to go to the 2-hour. See if I can refine it some more. I can't. It's still there, right? I'm going to go to the 1-hour. All right. So now I can refine it. You see this green candle right there? I know that's where the supply is. I'm not going to move from the high and I'm not going to move from the lowest point, right? I see right here, I can drop this down because it's the last candle before that big move, right? So this would be supply and demand. And I keep doing that. And I'll explain to you what an order block is after this, right? So I can move that up just a little bit. It sucks so bad not having my mouse. My fingers are going to be sore. I'm just kidding.
It's a labor of love.
Just a labor of love, bud. All right, then I go to the 30-minute. I can't change it, right? There's not a gap here. If there's not a gap, I'll leave it alone. I'm not going to change that one. Actually, I could change this one down because there's a gap right here. You see the gap? And then this is a gap. All right, then I go to the 15, right? And I'm constantly finding this. So now I could choose this gap, but it's already been traded to, right? So I'm going to stay up here because this is where the supply is. Same with her. This is where the demand is. So it's staying right there. And then I go all the way to the 5-minute. And this is where the sniper entries come, is doing this refining, right? So this one I can move over, right? You see how I have the gap right there? And the last candle all the way to the low, that's my demand zone so far. And I do the same thing. And if you don't see an obvious gap, you just leave it alone. Like, this is good enough, right? I'm trying to pinpoint exactly what's going to turn and burn, right? All right. Yeah, absolutely. And I just keep doing that, right? All right. And then I go all the way to the 1-minute, right? And then as price comes in to that zone, right? That's when I'm jumping from the 1 minute to the 3 minute to the 5 minute to find a break of structure. But before we go into a break of market structure, but before we go into that, let me explain to you what a order block is, right? So I just explained to you the supply and demand theory, right? And at this level, it is when it's at a high or low, it's pretty much the same thing. Let me fix my screen, right? So a order block is the origin of the move, right? Oh God. All right. It's the block that made it all happen, right? So what am I trying to do? Reset chart. All right. So with the order block, it technically is the, let's go to a higher time frame because we always want to be on the bias of the higher time frame, right? It's so you see you have this big up move and this huge down move. I need to know where the origin of this order came from, right?
So it's the candle before.
Huh?
Candle before.
The
Would it be at the bottom of
green
that
candle,
red
the last green candle. If it
Oh.
was, if we were going up, so it would, this green candle right here, that's the order block, right? However, there's multiple order blocks. It just doesn't pertain to this, right? Right. So I always place, if I have a supply zone with the order block, I always start with the supply zone because the supply zone is always going to be farther out. And as price comes into it, I shift it up to that order block so I can be tracking it, right? All right. So another example of an order block, all right? You see, market structure is done based off of 2 or more candles in that direction. So 2 green candles, 2 red candles, right? So this is an upward move. So every red candle I see, as long as it's got 2 or more, is considered an order block, right? So this one has 3, right? Let me what the hell? I hate not having
You want it?
what is going on with my, this is so annoying.
Where you at? I'll drop off a mouse.
You're a retard. All right, so check this out. Imagine I can draw a box because I don't know what the heck happened in my. Let me try this real quick. There we go. All right, back to where we were. Holy cow. All right, and I did it again. Oh my gosh. All right, so check this out. What the fuck? All right, let me try this one more time. I'm
Bro,
not
what is
zooming
going on?
I'm upside down. God damn it.
I
Oof.
don't know what is going on with my computer. I'm going to log out and log
Use like double or triple finger zoom out on your mouse pad. You're zoomed into the actual screen.
Oh yeah.
Yeah.
Okay, got it.
All right, for this brief interruption here. All right, it was a perfect brief interruption. We're going to join in here. We're going live with all of our guys that are teaching you everything that you want to know about stocks. Get in here and start learning. Why are you out there searching, Googling by yourself and watching friends make money, watching people leave jobs, and you're sitting there sitting in the dust? So start listening and start learning. We're taking a brief interruption here, or sorry, brief intermission here, and you have no idea what's going inside this headset of mine right now that I have muted so you guys can't hear. But we'll be right back.
Yes.
Order block. So in a bearish manner, 2 or more green candles
Would be an order block.
block.
All right.
Okay, that's easy.
Yeah. So check this out, right? So we're going to use this example right in front of us, right? You see how we have these 3 red candles? Bam, that's structure to the bearish side. That is where the central banks are ordering longs and shorts, right? But they're ordering their longs right here specifically just to manipulate this move back, continuing up, right? So we know that this being an order block, that's where the central banks bought more longs to manipulate the market up more. That it's going to return to it, so they can get rid of those longs at a discount at a better price, right?
But they
So,
went and
as
knocked
you
them
can see-
out right there, didn't they?
What?
Because that green wick on the bottom, that's where they collected it.
I
No?
want you to think of it like this, right? So you're thinking supply and demand, right? I'm talking about order blocks. Remember, supply and demand means there's orders left here, right? There's orders left here. So there's stop losses and limit orders here. There's stop losses and limit orders here. An order block
Right. So they
is
got to
the
go back
or-
and collect them.
Listen. An order block is the origin of where the central banks buy the manipulation order for that price, and they're going to always return back to that price to get it to sell it even or with a profit, right?
It's where they started the move, and they're going to come back and get all that action that was left behind, basically.
No, that's supply and demand, bud. So check it out. Check it out. I will draw it out on pattern and then walk you through each part of it.
Guys, here, T-Pay message up here. Oh, there it goes.
All right. Remember the pattern I showed you that was like,
Yeah,
yeah. Who was that?
it's Biggie.
Smooth voice, boy. Oh my God, if this doesn't stop. I hate not having a mouse. This is annoying, right? All right, so check this out. So pretend like this is this move right here, right? They consolidate right here. They manipulate the market up, right? Right there, and they're faking people out with this drop right here. But the real purpose of this drop right here is for the central banks to fill up on more orders, because you got to realize the first manipulation piece, they don't have time to sit there and buy more orders to get this move going higher, right? So they consolidate, like you see here. They manipulate, they consolidate, and then they do an order block here to get it up to this price. Then they bring it back down to retrace to get more orders, and they shoot it up, right? All right. So this is this part of this pattern. This is this part of this pattern, right? And this is this part of the pattern. So I know that once this, well, it already has. Once it leaves this demand zone, it will return back up to here, because remember, the money that they bought on this drop, right? The longs that they bought on this drop right here, they lost it when they did this move right here, because this move always happens really fast, and they don't have time to download all the longs that they had at the central bank level, which is why it always returns up there, so they can recover their profits on that, right? Because they're shooting for this downward move profit, right? Because they're getting a lot of money on this, so they sacrifice some money for this move right here, because they know they have to drop it, and it's not until here, when they return to here, that they can recover that money that they sacrificed and manipulate the market up, right? Does that make sense? That's an order block. So same with here. This is why this is a.
Can you just repeat that last 30 seconds right there, because I disconnected?
Okay.
You said that they came back to collect right there, or to collect more.
To make it an order block is where the central banks are placing the orders of manipulation, right? So right here, when the market's going down, we're in a bullish structure out of a consolidation, right? It's a bullish structure. And then you see red, like 1, 2. That's the area where the central banks are buying more longs to manipulate it up more, and they're trying to shake buyers, right? Same thing here. They will return to these prices, right? Because when they come up and then they shoot it down, and then they shoot it up, and then they shoot it down, that all happens like fast, right? At the central bank and the bank and the institutional level, right?
Yep.
And so the whole difference between An order block and supply and demand is always at a high or a low after a big move like this, and they're always chasing the liquidity of stop orders and limit orders above, or in this case below, right? An order block is where the central banks are positioning their orders for the manipulation move. Like these two green candles are an order block because these are the origin of this humongous move, which means it will return up to here, right? Just like here, these 3 candles, it returns back to there and then shoots up, right? These 2 candles, let's draw a box. Let's see if it returns.
Yeah.
It returns, right? And then it shoots up, right? It breaches it just right there and then shoots back up for the 2-hour block that it is, right? All right. So that's the difference between supply and demand. You guys understand that? Because I got to move on. And order blocks.
Much better.
So the order blocks are the opposite candles in the formation.
The order blocks are what they're coming to take back from where we put our stops, basically.
No, that's supply and demand, bud.
God damn it. Really?
The order blocks are where they're going to go and manipulate the movement.
Thank you.
We know that. Okay, gotcha.
That's just the origin, right? So remember,
that's where it started.
These aren't just to shake the movers, the buyers, right? And to try to get people to sell. The real true meaning behind this is because this is 6 hours worth of going down, right? The whole purpose of this
is to manipulate.
For the banks to buy longs, buy a crap ton of longs to make it shoot up right here. Notice this one is
in the
1.
other direction.
This one is 1, and it didn't return to it. Right? And you always start on the higher time frame so you can define this, right? All right. So everybody's got that, right? Because I need to move on if I'm going to.
Yeah, I got one question before you move on, though.
Who is this?
Hamza.
Oh, what's up, bud?
Hey, what's up, man? How you doing?
Good.
Okay. My question is, okay. You got a bullish market. It's going up right there. So you will know the bank manipulation is those 3 red candles right there.
Say what?
You see those 3 red candles?
Yep.
That's the order block. That's the order block right there, right?
Yes, because it's 3 or more. So when a bullish market is 3 or more, and then it shoots back up, right? And there's ways, and I know where you're going with this. You're trying to figure out if we're going to reverse, right?
Now that's for that big move right there. Now the same thing when it's in the bearish market.
Yeah.
Those are that's 2. I think 2 of them. Right? 2 greenish bars.
Yep, it's 2 greenish, right? So this
that's where they're coming. That's where they're coming back and collecting. That's where they're gonna come back eventually and collect.
Yep, they will always come back to these order blocks and supply and demand zones. Always. All right, guys. All right. Does that make sense, Hansa?
Yeah, it does. And to the bottom. What bar am I looking at in the bottom though? Is it the green? Yeah, the first green or the red?
Okay, so no. Let's break this down a little bit more. That's too far. Okay, so check this out. Right? So supply and demand would be this green candle where the wick is. Right? But if it was an order block, it would be and it's coming off of the down move or up move. It's going to be the last red candle before the up move, right?
Before the up move,
it's going to be the last green candle before the down move, right? That's the actual order block. And remember, it takes 2 candles for market structure, right? So obviously it's the last 2 candles. So I'd mark this whole area right here. But I already know, so when it comes to high or low, I already know that this isn't going to matter. I'm going to zone it into this demand zone. But these ones right here, right? Let me draw them out for you. All right. So as it goes back up, it will come up to here and it'll drop again and it'll hit another order block or another supply and demand zone and it'll continue back up. And then once it hits here, now that's a whole nother class. We have to figure out if it's going to reverse or whatever, right?
Yeah.
All right. Does that make sense?
Yes, sir.
Yes.
Yeah.
All right. Badass. Now let's talk about the difference between breaking market structures and a stop. Breaking market structures and a break of structure, right? So remember, it's all based off of highs and lows, right? Which is why taught you guys gazillion classes on highs and lows and higher highs and lower lows and all that.
I was just about to ask that. Now, is there higher highs? Or does it have to have a certain formation of higher highs and lower lows during manipulation to indicate where it's going to go?
Nope.
Okay.
Nope. This is going to tie into the next class. All right.
Okay.
All right. So this is a perfect example, right? So you see this high right here? This is a higher high, right? A body went through it, which means it traded higher than this. So it engulfed this high. So it engulfed all orders on this high, right? There's another high. And we're still in a bullish market, right?
Yeah.
A body went through it. It engulfed it. And if you guys aren't taking notes, that's on you, bud. That's silly. All
It's
right?
recorded.
No, it's not.
It's not.
Nope.
Oh.
All right. So right here, right? So we have these three, which are known as break of market structures. And this would be a stop hunt, which is a whole nother class at a lower time frame, right? So a break of structure is just like it engulfing the highs or even the lows, like right here, low, right? That's just confirming that we're going to continue going up. Remember I said if you have a higher high and a higher low, we're in a bullish market. If we have a lower low and a higher low, we're in a bearish market, right? But the moment we get a higher high and a lower low, that's clue number one that we're probably going to reverse. And when we get the lower low and the lower high, we're reversing, right? Remember all that?
Yes.
Well, this class is going to teach you how you don't have to mark up your charts. You just got to look for it, right? So I know that these higher highs, we're establishing higher highs and higher lows all the way up, right? All right.
Yeah.
So now they determine if it's a break of market structure, right? Let me remove my drawings.
Hey, can you hear me?
Yeah, who is this?
This is Buns.
What's up, bud?
Nothing. You were just saying about the bearish and the bullish. I'm brand new to this. I'm taking notes here. You said that for a bullish it was higher highs and higher lows, and then could you just repeat that once more? I was just in the middle of writing that down.
Oh, yeah. So it's going to be higher highs and higher lows for bullish. And then it's going to be lower highs and lower lows for bearish. And then once you see one of those go offset, that's your first clue that we're going to reverse. And then when you confirm it with the second one, that's your confirmation, right?
Okay.
All right. So
He's got a good
structure, right?
Second one, the engulfing candle. Is that the second clue?
So it's this area right here. When this high is taken out?
Yeah, by the engulfing body.
Yeah,
yes.
That's it.
Yeah.
Right? Just like this. This is a break of structure. Actually, I would have played this a little bit different because it's a stop hunt. And it definitely did it as a stop hunt, but it's not. I'm not going to go into that. That's not part of this class right now. All right, so now we continue to identify break of structures. Remember, there's break of structure and break of market structure. Break of structure just means we're continuing the trend that we are. So we took out this high with another high. We took out this high with another high. We took out this high with another high. Break of structure means it's just going to continue in the direction. All right. Now, identify the reversals because this is key to learn for this strategy. And I promise you guys are committed. Like you're here, like in about a month or two, the public access and the paid members won't have access to this. Like the business is going to charge people extra for this. So take these videos and take all this stuff to heart and learn it, right? Because once I pull it off my tab and all that, it's gone until you come into the pro session. All right. So let's talk about break of market structure, right? So now we're consolidating, right? We got a lower low, we got a higher low, we got a lower low, we got a higher low, right? So with a break of market structure, all right, we need to take out the lows, right? The most dominant low, right? And that's the most dominant low of the swing. Remember I taught you guys swings? This is a swing high from the high to the low to the high. And a swing low is from the low to the high to the low, right? So this is bullish, right? But if I look at this low right here, this is the most dominant one right here, right? So the moment we break this low from the wick over, and write this down in your notes, it has to be a body. It has to be a body that engulfs this low, because this is a swing high. We're in a bullish manner. Swing low, we swing back high, we achieve it right here. We take the lowest point, right? Which technically could be here, but I don't like playing these because this is called a turtle soup, and I'll explain that like way more in advance, right? Which is the same as a stop hunt, but you play it. Never mind. All right. So once this wick down, we're still in a bullish market, right? Because this did not close this low. It did not engulf it whatsoever with the body, right? Because the liquidity lies in the body, right? But once over here it engulfs it, guess what? I look for a supply and demand zone. I look for an order block. I mark this off. I identify a stop hunt. Bam. And I start identifying places where I know it's going to return, right? And you guys are going to get so good at it that you're going to be able to like play it at this point right here. Like at this point, and if you're really good, you're going to be able to play it like this. And like literally you're going to grab this from the 2 hour, and then you're going to be in the 1 minute sniper killing this stuff. Ain't that right, Fred? Are you there? I guess not.
Oh,
all right,
Mickey,
so now
a break of market structure is any engulfing candle that takes out the low or the high.
Nope. Okay, so a break of structure is just engulfing the direction, the last high or low that we're going. So right here, break of structure. A break of market structure is if it's a bullish range, we engulf the low. If it's a bearish range, we engulf the dominant swing high. Remember, it's off of a swing. It's not just any old one. It has to be the low or the high of the swing.
Engulf the swing.
Yeah, can you repeat that again, please, what you just said?
Like wave trading.
All right, so check these out. So break of structure. Break of structure. This is just a high. This is the high of the swing. Yeah, but we're already in a bullish manner. So we engulfed it with another high. So it obviously just confirmed that we're going to continue going up. When this body closed, right? It can't be like this, like while it's active, jumping back and forth. Once this body closes above this high, like we know we're going farther up, right? It got engulfed, and we're going to set a new high, right? Same thing, concept with low, right? But the moment that this swing right here, swing high to low to high, to low to high, the low to high, since this is the lowest low, once this is engulfed, right here, that tells me, hey, we're in a bullish manner, right? But it fakes me out, right? It happens sometimes. That's why you know.
Fakes me out too.
This is a 2 hour chart, though. Like this is why, like you get your plays on the daily, and the weekly, and the 2 hour, and the 1 hour, and the 45, and the 30, and then you get your entries and exits off the 1 minute, and the 3 minute, and the 5 minute, right? That way you don't get faked out, because I promise you, like, there was a lot of clues that said, and like, let's say from this point where it was engulfed, it came back up and then came back down. So 2, 4, 6, 8, 10, 12. I have 12 hours to play off of this engulfment, right?
Mickey, go back to that green bar that engulfs that red. That fakes me out right there on that. Look, it consolidated. It consolidated. Yeah, right. That one. It consolidated. It dropped down to red. That green engulfs that red. That kind of tricks me into thinking it's going long.
It played into something, and your absolute market are we in right now? When we hit this part, we notice that we have lower highs and lower lows, right? And we have dominant 2 hour candles that are bearish, right? So it's fair to say that we're already bearish, but until we break this low, we can't say we're bearish, but we can still make plays off of this, right? All right. However, I know that it's not going to return a level until I see a break in market structure. And that's all I need you to get, because right here, this 2 green, remember, 2 or more makes a market structure. So if we're in a bearish market and I see 2 green pops like this, I either know we're in a reversal, and I'm going to check that out, and I'm going to wait for it to break a market structure here, which it did right here. that tells me we're back in a bullish manner.
See,
along with these damn highs and higher lows, right? But at this point, that tells me something's happening, right? And this is called a breaker. And I'll explain that to you later. Like, you don't need to know that right now with this strategy. But, like, I know we're going to return to that area, and we do right here. All right, that's a whole nother class. That's a more advanced approach that I don't want to teach you guys tonight. All right, so let's look at some different things. Okay, write this down. If you haven't watched the stop hunt, then you need to watch the stop hunt video. You need to watch my videos and learn this stuff. But like, all you need to know is stop hunt plus a break in market structure equals a return to order, right? Stop hunt plus break in market structure equals a return to order. So if you ever know anybody who plays Forex, right? Forex produces kings of traders, right? And I'm in a couple of groups that do Forex right now. They are so lost with options, but once I showed them this strategy, dude, they're making killings. Like, I made $1,000. Actually, I made $1,500 in like 20 minutes today off a SPY using this exact currency right here. So what we're going to look at, what I'm going to teach you off of is, so if I want to play options, if I want to play options and I really want to see what the algos are doing and I want all the volatility, all the variables removed from it, like, I am going to look at SPX 500 USD. That is the S&P currency, right? And I'm going to look at NASDAQ 100 USD, right? This one, right? So I usually use, and you got to look up what's in these NASDAQs. What's in the S&P 500? What's in the NASDAQ? Who has the most, like, so I play Apple when the S&P 500. I play like the tech stocks when I'm playing the NAS 100 USD currency, right? All right. So the reason I like Forex is because it's clean, it's regulated, and if it's American pairs or American currency, there's a lot of regulation, no variables that I have to worry about, like earnings reports, bad news, stuff like that. It's there, but like, I can see it happen. Like, I can see the move playing out before like it actually happens. So we're on the 3-hour chart, right? Let's go to the daily and see something. All right. So the market crashed, right? And there's ways I can tell this, but me and Fred both know, but we'll teach you guys once you get this concept, right? Because I can't teach it all to you in one night. So I know at some point, and I know when, that there's two, just off this daily chart, right? And I'm going to go back and refine this to a low time frame, right? So I can get more awareness, right? I know that the market, like on February 15th, when it did this uptrend, I knew it would be back pretty damn soon, right? Went to the 4-hour, I refined it. I went to 3-hour, blah, 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 right? So like I said, if you guys want to play this strategy off of options, here's what I'm going to recommend, right? You use the NASDAQ 100. You figure out what stocks are in there that you want to play. You use the S&P 500 and figure out what stops. You can't just be picking stocks that have no value to them, that don't get moved by the market, right? So Apple, like when the S&P 500 moves, Apple moves exactly with it, right? But the problem with ES futures and playing SPY and playing the SPX indexes is that there's not manipulation, because there's manipulation everywhere, but like, they're not there's a couple of different variables that go into it that the algos don't consider, right? That will throw you off in your charting, right? And I'll show you guys that in a few, right? So that's why I use the currencies for all this, right? So check this out. Let me show you the play that I did today. Okay, let's go over the strategy.